We've got George Alexander joining us this morning of Muthoot. Thanks so much for joining us this morning, Mr. Alexander. Good to have you with us to discuss, the outlook going forward, and given the strong performance also that you have seen. Let's just, kick start with talking about, the last decade since listing. You've been one of the top 5 best performing stocks. What, according to you, were some of the major contributors to this outperformance, particularly more recently when the overall market sentiment remains weak?
Thank you for the good words. I think after listing, Muthoot Finance has been focused mainly on its core strength, or the core strength of Muthoot Finance has been in the gold financing sector, and we have actually stuck to that. Right from there, we have been always focusing on gold loan business only. Even today, 90% of our portfolio is only gold loans. I think one of the main things is that we have stuck to our core competence. Our core competence was there, gold finance, and that we have stuck to that, and that is actually giving us good business today.
The problem, some would argue, is that gold prices are not moving the way they moved in the last decade. If I take all the import duty and the currency part aside, gold prices have not given great returns. For this decade, silver has given negative returns. Your business is highly dependent on the movement in gold prices. What happened if gold prices don't go anywhere for next 3-4 years?
I think I should correct you there, that our business is not dependent on the gold price, because our loans are just for 4 months only. The average tenure is only 4 months. So whenever what we give is today's price. If the price of gold has corrected, if it is up, we give today's price. 75% of that is maximum we give. So, and also it is 4 months. In 4 months, there has never been big sharp fall or fluctuations in the price. So gold price has never been a factor for us, unless otherwise there is some 50% fall in the gold price, etc., which has never happened. It's only a very small ups or downs, and it takes time. So if 50% price fall happens in 2 months, 3 months, then yes, we can think of a problem. Otherwise, a slow movement up or down wouldn't affect us at all.
About your risk, all I'm saying is that if gold prices they go higher, obviously the ability to lend increases. I mean, if you were lending when gold prices were 30,000 versus when gold prices are 40,000, obviously the transaction value goes higher. So my whole view is that if gold prices remain flat, I'm not talking about risk, but I'm talking about the size of opportunity. Will that get reduced?
You should also understand it's not that the same number of people are coming in again and again with the same gold. See, the market is so huge. There is so much of 20,000 tons of gold lying as ornaments with the public. And today, what is there in the organized gold lending market is just 100 or 200 tons. That's all. So the rest is still out there. So more and more newer people are thinking of gold loan as a very quick and easy, convenient way of getting money. So as we progress, more and more people are using this opportunity to monetize the idle asset which they have. That's why we do such a lot of advertisements also. Newer and newer people also come. So it's not that one person who had 30,000 worth of gold, now it is 40,000, so his power to borrow is higher. No, newer and newer people come. More than 20% of us are newer customers every time coming to us. Every time, more than 20 to 25% are new customers coming to us.
You've recently purchased IDBI's AMC business for over 200 crores. Talk to us about that, the rationale, the outlook on this segment.
Muthoot Finance, we have been in this financing business for several decades. So from 1939, Muthoot is there with the public. And we had been getting money from the public as gold bonds or NCDs, private NCDs, publicly listed NCDs. So people have been depositing their money with us and continue to deposit money with us. Today also, one of our NCD schemes are running. So just as we have a gold loan business, we also have a good franchisee or good customers who invest in our company, because they see Muthoot Finance, they can relate to the company. So they are very confident of depositing their money with Muthoot. So there is a lot of customers who deposit their money with Muthoot. So we thought it's a natural thing that we should also look at mutual funds, because Today, we do little brokerage, broking for some other mutual funds. So we have tested that market and seen that people still continue to believe in Muthoot. And so if we also start a mutual fund, it definitely will see that these customers are retained with us. So today, their option is only NCDs of Muthoot Finance. So if we start a mutual fund, gradually these customers will come to us. So we have a branch network, we have a lot of customers. We can offer this to the customers so that we can retain them with us for their other investment also. That is why we thought of this mutual fund business.
276, I'm just marking Z price here, even though I'm just going to take a detour for a second. 276 rupees for Z. This is one stock where even though the pledge issues have got over, the overhang is just not over. So just to understand your business model, I mean, gold is in abundance. India is a country where the credit demand is, demand for credit will always be abundant. So can I say that 15 to 20% growth is there as long as you want to grow at that rate?
Yes, I think we have 15. So we have guided for 15% growth. Probably we should do more than 15,000, maybe around 15 and 20% growth this year also. Going forward also, we see this because, as I said earlier, more and more people are seeing this as a convenient way of raising money in the short term. It's a bridge finance. See, people are not getting finance for their small businesses, etc. From the banks. It is delayed. They use this. Once they get the finance from the banks, they replace it with the bank loan. So till then, this is a bridge finance, and this has helped us. And we have always stood by it, saying that this is a bridge finance which will help the customers to tide over their immediate funding requirement.
Fintechs. And I'm talking about a 5-year view here. Fintechs are saying that they can also give bridge finance. They can give bridge finance at different rates. They are following a model where platforms are now able to make borrowers and lenders meet. The collateral here in this case is very, very different. Is that a threat to the proposition of gold financing?
Gold financing has been there for decades. There have always been people who lent money with security, without security. Today, yes, without security, people are looking at fintech finance also, and microfinance is also there. They have also been there for last 15, 20 years, but it has not affected the gold loan market or a gold financing market at all. So it is there. People have many options. They can go to microfinance, they can go to fintech, they can take a pledge loan, they can take a personal loan, they can take an SME loan, they can go to banks. But this is another option. That's all.
Mr. Alexander, banks are also, of course, giving out these loans, and their cost of borrowing is actually, very competitive. So how are you keeping up with that, or how are you offering something that's more attractive?
The customers for this, I told you, people take a loan and they give it back or return it even 7 days, 5 days, 1 month, 2 months, etc. And we charge interest only on the actual number of days. There is no entry load, there is no service charge, there is no prepayment charges. So it's very, very convenient, and we are able to give it a loan for the first time, maybe 15 minutes. For second time, if it comes in 10 minutes, the customer can walk out with the money. So it's more of a convenience. And the actual average ticket size for us is only 40,000 rupees. So we start with 5,000, 3,000, 7,000, 50,000. For those customers, the difference of interest, the interest differential between us and a bank is on actual rupee, it is just 50 rupees, 100 rupees a month, etc., which is not worthwhile for them because of the customer service. For us, customer service is very important. And that's why I said 75% of our customers come back to us later on. Maybe they take a loan, they repay it in 1 month or 2 months. After 6 months, they come back again for a loan. So this is the convenience, and that is more, it's not the interest, it's not that interest sensitive. That's what I wanted to tell you.
So closing comments. What are the chances that you may end up diversifying outside your core? Mutual fund, I'm afraid, sir, is not your core. It's going to be, we have a lot of AMCs which are struggling from years to reach a scale and size. What are the chances that you spread yourself too thin in the next 5 years?
See, there are two things. One is our lending portfolio. Lending portfolio, our core strength is gold loan, and we will stick to that. That's the first one. The second one is we are just looking at the liability side. So we are giving a service to our customers only. It is not that we are going to take any risk in mutual funds, etc. It is just a service which we can give to our own customers. We don't want to have brokers and agents doing this for us. We will sell it through our 5,000 branches to the customers who come to us. We give them another option of a savings. That's it. Now, other than that, it is not a big portfolio. It is not going to give us big returns like gold loan, etc. But it is a service or a way to retain our loyal customers with us for their deposits. So they will deposit in mutual funds. They may deposit in a bank, or they will deposit in NCD. So we have to be there to get their NCD business also, because we also do the insurance broking also. So this is just another business which we can do to help our customers who have excess money with them.
Alexander, appreciate your time and thank you for joining us.